Capital One just agreed to purchase Discover Bank for $35 billion, and I've got two questions. One, Discover Bank was small enough to get acquired? Yeah, apparently. Two, will this acquisition affect you if you're one of their card users or bank account holders? And if so, how? That's what we're getting into in this video, so let's jump in. First things first, Capital One just agreed to purchase Discover Bank, but the purchase may actually not go through, because with every large purchase like this, the Securities and Exchange Commission gets to approve the sale, based on if they believe the acquisition will positively impact the economy or create a monopoly. That's oversimplified, but you get the gist. If the sale goes through, which a lot of people think that it will, well, that's where some interesting things may begin to happen. Like number one, Capital One would become the leading credit card issuer in the nation based on balances owed. And by the time this deal would go through later this year or early next year, it would presumably be the 6th largest bank in the nation. So some people think that because of this, the regulators won't allow this deal to go through. However, others believe that since Capital One won't be at the top size-wise, it won't be enough of a threat for regulators to shut down the acquisition. We'll just say there are some huge banks out there. Number two, this acquisition could potentially impact how much Capital One charges in interest on their credit cards. This is something that I found very interesting in my research, but according to Investopedia, bigger banks tend to charge higher interest rates, according to the CFPB study published last week. CFPB stands for Consumer Financial Protection Bureau. Large institutions charged customers with good credit scores an average of 28.2% interest versus 18.15% for smaller banks. That's over 10% higher interest than smaller banks. Now, I highly doubt that purchasing Discover Bank will impact Capital One's interest rates by that much. But by the stats, it appears that this could impact the amount that consumers would pay in interest on their balances. Number three, this acquisition actually could maybe increase the amount of competition among payment processing networks. The four main payment processing networks right now are Visa, Mastercard, American Express, and Discover. By far, Visa and Mastercard are the largest. But here's the deal. Capital One would be purchasing not only Discover's banking services, but also their payment processing network. So having said that, there's a decent chance that Discover's payment network could be expanded based on Capital One's influence, meaning Discover cards could eventually be accepted in more locations, potentially more locations internationally, and capitalism suggests that increased competition would be better for consumers in the long run, which means maybe saving customers more money. Now, who knows if this increased competition would actually save consumers money. What I do know though is that one of my #1 goals on this channel is to help you save money. The more money we can save, the faster we can reach our financial goals, which is why I'm partnering with Mint Mobile for this video. Now, we're in the process of switching to Mint Mobile right now for 3 reasons. One, Ryan Reynolds owns it.
Hey there, it's Ryan Reynolds, owner of Mint Mobile. Enticing, right?
2, my family has used Mint Mobile for years and they all love it. So here we are switching. And number 3, Bailey and I have had unlimited talk, text, and data for quite a while, and it's been fairly reasonably priced until I started looking at Mint Mobile's plans and realizing how much extra money we could be saving. Now, I had some general concerns about switching. One, I hate switching phone service because it takes so long. Well, guess what? Switching to Mint takes 15 minutes. It makes switching to Mint super easy. Thanks to eSIM cards, which most phones nowadays have the capability of using, you can sign up and activate your service immediately straight from the comfort of your own home. 2, am I gonna have enough data? Yes, we can still get unlimited and it'll still save us money off of our current bill. 3, will I even be able to use a hotspot anymore? And yeah, you can still do a hotspot through Mint. Now, Mint is seriously gonna save you a lot of money. Their plans literally start at $15 a month. And then you can take that savings and put it towards debt. Maybe paying off that Capital One or Discover credit card that you've been putting off. Personally, we're putting our savings towards paying off the house fast. Big Wireless wants you to think that they are your only option. Well, don't be duped. So go to our partner, trymintmobile.com/CalebBale and get premium wireless service for as low as $15 a month. Just stop paying more than you have to on your phone plan, please, for the love of chocolate milk. Now, what I just told you about were some possible consequences of this acquisition. But how could this impact your banking or your spending if you are a Capital One or a Discover customer? This is way more interesting to me because I don't review credit cards, I review debit cards. I actually do think this acquisition could impact your banking or spending if you're a customer of either company. But we have to look at the banking and the spending in tandem. Ultimately, I don't think that this will affect banking that much, at least when it comes to savings rates. Both Capital One and Discover have very comparable rates when it comes to their high yield savings accounts. Discover currently sits at 4.3% and Capital One currently sits at 4.35% APY. Very similar with their CDs. They're very comparable. Comparable? I think they're interchangeable. The places where I think we could see the biggest changes are where there's a gap in terms of the products that are offered, primarily with the checking accounts. Capital One has a checking account where they actually offer interest. With all the fintech companies that are popping up, interest on checking is actually becoming more popular, but it's still fairly unusual for a checking account. Now, the interest rate on Capital One's checking account is nothing crazy. It's like 0.1%. But let's be honest, you can't even get a Chase savings account that has even half that. Discover's checking account offers 1% cash back on up to $3,000 of purchases every month without any fees. That's awesome, and one of the reasons why we use our Discover debit to make everyday purchases, because we aren't a credit card family. Honestly, I suspect that this is a way for Discover to get people into their service and then be able to get them to sign up for a credit card, because they're not going to offer 1% cash back just to be nice. That's about as crazy as thinking that Nick Fury just bought Discover Bank. Now the question is, will Capital One adopt this and continue offering it as a benefit? Genuinely, who knows? And I think NerdWallet made a good point with this. If Capital One provides cash back on debit cards on the Discover network, that would be unique for such a banking giant. One thing about this acquisition that could actually impact consumer spending is that once again, Capital One will own a payment processing network. And outside of increasing the competition that I mentioned earlier, this means that Capital One will garner interchange fees that are not only owed to banks per transaction, but they would also get the interchange fees that payment networks, in this case Discover, garners for processing each of those transactions. Which means this could allow Capital One some flexibility to play around with the rewards that they offer customers, both credit card customers and debit card customers, since they would be bringing in more profit per transaction than most banks. So it's going to be really interesting to see where this goes. But ultimately, if this deal goes through, I think this is an opportunity for Capital One to really make a huge difference on the kinds of products that they offer and make them way more appealing to customers than most other banks can offer. Regardless, I'm going to be keeping my eyes on this, and I'm also going to continue pumping out content that helps you all decide what kind of debit cards you want to use, and also content that helps you with budgeting, paying off debt, and controlling your money through expense tracking. Subscribe here for more fintech reviews. Check out the description to save on your phone bill with Mint Mobile, and watch this video next.